It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, September 10th, 2015. Wrapping up another incredible week in our live trade room and our nightly newsletter. The word of the week has been what? Rotation. Rotation. Channel rotation. Range rotation. We knew it was going to be a busy week, but boy, oh boy, this is an incredible week. Crude oil bouncing off of its lows after rotation. The E-mini S&P, what is going on? All the way up, all the way down, and then S&P struggling right in the middle of that range right now. We're going to plan for the S&P tomorrow. How about that euro? We laid out the line in the sand for the buyers in last night's newsletter, and they not only hit that, but they smashed all the way back up to the highs of the range. We're looking for a correction to buy more here on the euro, but we're definitely still bullish on that euro. And how about the gold? Plan working so far. Stay patient on the sell side, but I think we're ready to start looking for selling opportunities tomorrow on gold. You know me, I got a plan for you guys and gals. We got a ton to talk about tonight in our nightly newsletter. We got one more day this week, and then we get a break here for the weekend. Before I jump into those charts and the strategy for tomorrow, I do want to remind you guys, make sure you're watching the video on our trading blog right now at sidewaysmarkets.com. If you're on our YouTube page right now, there's a link in the description of the video. That'll take you over to our blog. Couple reasons why you might want to be watching this on the blog. First of all, if you're not a member of School of Trade and you'd like to get a free pass as a guest to come out and test drive our live trade room, you can grab your free pass, upper left-hand corner, lower left-hand corner. Now you never have to worry about missing another newsletter video ever again. I'll shoot you an email every evening. All I need is your name and your email address, and then make sure you check your inbox. I'm going to send you a verification email to verify your email address on that. Right below the video, you'll see the download link for all the charts. How nice is that? You can download all the charts from tonight's video right below the video on the blog tonight. And then, of course, over on the right-hand side, we have a very, very good free trial here at School of Trade. I take a lot of pride in the fact that our free trial is better than most other websites' paid membership. Grab your free trial on the right-hand side. You can read about membership reviews, membership information. And don't forget, guys, I've always got someone standing by here 24/7 to answer all your questions along the way. Get off my screen. Let's get going. Newsletter time. Let's jump into some charts here. Last newsletter of the week, and boy, oh boy, has it been a week for the record books. Let's start out with the 6E. This is the euro. Now, we are on a rollover alert right now on the euro. The volume is going to be shifting to the 12.15. We're pretty much right on the fence right now. We won't know when rollover hits. Come out and see us tomorrow in the trade room. We'll confirm on rollover. Remember, once the volume is higher on the 12.15, we'll roll over from the 9.15 to the 12.15. So let's take a look here. Euro is bullish as the buyers are only inches away from completing the rotation, if I can speak here, from the low up to the high. If you remember in last night's newsletter, we had a line in the sand right there. And we said, all right, we got to get back to that high today if we're going to have any chance to get all the way to the highs. And you can see not only did they reach the must-hit target, but we pulled right back after and then bam, complete the measured move. Now, those measured moves are very, very important. Let's keep reading here. We are overbought near the highs after multiple measured moves were completed, and with the highs of this new bull channel staring us right in the face, we know the best buying opportunities will come after a rotation back to the channel lows and back to the 50% support level right around that 1200, 1203 area. So let's take a look at the notes on the euro right now. First of all, rotation. We got a couple examples of rotation right now. First of all, we rotated from the highs down to the lows. All in a day's work here. We nailed it this week. Excellent job. And now we expected to see rotation all the way back up. So we are, as you can see, literally inches away from completing the rotation. That alone tells me the easy money for the bulls is already in the rearview mirror. If you followed the plan today and you bought down here, then you're looking pretty, and I'm personally looking to take profit up here. You can try to hold a little bit of that portion up to the range highs. I got that 13.10, but just be aware though, you're up there in the nosebleed seats right now. So now is when you want to start peeling off the money from this position because, again, rotation all the way back up is definitely expected. However, there's another rotation we're looking at, and that is a short-term bull channel. This is really why I think you really got to take some money off the table here right now. Rotation, low to the high, back to the low, up to the high. Now, don't get me wrong. This won't be the first or the last time that this thing just blows right through the highs just to get that target and then come right back down. But you know us as professional traders, we're all about probabilities. We don't think what could happen. We think what is the highest probability. And right now the high probability is this price comes back down before it makes its next push. That's what our plan is going to be for tomorrow. So take a portion of that position, if not the entire thing. If you got a couple bullets left in the gun still, I would leave one to the high. But if you've only got one more contract left on this position, now's the time to take your profit. You've got the measured moves completed, multiple measured moves completed, right? We're not trying to be a hero. We're not trying to be perfect. We're just trying to be profitable every day, grow the account mechanically. And of course, if you want to make more money, you'll have to just simply trade a bigger position size next time rather than trying to get bigger moves. So in the eyes of rotation, we're looking for rotation back down to complete that move back up. So combine the measured moves, combine the highs of the channel, and again, if you're looking to get long right now, you are staring right down the barrel of a gun right now. It is extremely aggressive to be buying here right now. I'm looking to be a buyer after that deep correction. So range rotation, ABC, channel rotation, and rollover for tomorrow. You're probably going to be okay trading the 915 tomorrow, but if the volume is significantly higher in the 1215, we will roll to 1215. The official rollover is today, but remember, day traders, we're going where the volume is. And until that 1215 volume far overcomes it, right, we're going to be trading the 915. So watch the volume tomorrow on the euro. We're looking good here. Let's keep going. From the euro over to the gold market here. I told you guys to wait patiently last night. Now our patience is paying off here. We are right in a beautiful spot here on gold, but I'm telling you, we got a pending FOMC announcement regarding interest rates later on this month. We got quad witching next week, at the end of next week. This gold market, if I had to guess right now, I would guess this is not going to be as easy as it may first look. So you want to think, where would the traps be had right now on gold? And let's wait for the traps, because that's where you're going to get the best tradable opportunities. Let's take a look. There are two main components on this chart right now. One is the channel. Second one is the range. Let's take a look. On the gold, we know we're bearish, right? We know we're bearish. And just in case you forgot here from earlier this week, right? This is the major channel that we've rotated all the way off the high, down to the low. Remember this from earlier on this week? We were expecting rotation higher, right? But the buyers couldn't get their act together, and then one try, two tries, now we're bearish. We are in bearish expansion right now, and the line in the sand is at 1117, the low of that range. So what we know is, we know that the buyer rotation off those lows failed. We pushed down twice and stayed below 17. That means we do have a bearish bias. Now with that bearish bias also comes this channel. And this channel was used very, very well as a final target for you sellers earlier on this week. And it's also been used as a point of reference to know when to be looking for additional selling opportunities. So the bias is definitely bearish right now on the funny yellow metal, the gold futures. We're not dealing with rollover on this market for quite some time, not till November. So not to worry about that. But we do know bearish bias is going to tiptoe around this 1117. Until we get above that 1117 and stay above 1117, we have to look at this through the lens of a bear. So as of right now, everything we do until we get not just poke our head, but until we get and stay above that 1117. And here's why I say that is because you can see a little bit of a phantom trend line here drawn in. And I call this a phantom trend line because this trend line is not drawn correctly. It's not off a major swing. It's right in the middle of the range. It's one of those trend lines that only a few people are going to be able to find. And so what's going to happen is you're going to see it. It will probably get tested. That will make it very difficult for bulls to get the first try going higher. So you're going to want to see the sellers try and fail before we get that buying opportunity back above the 1117 here. Gold is bearish this evening and ready for sellers to get back to work on rotating price back to the channel lows. Channel lows, channel lows, long-term channel. We know where the targets are. Down at the swing low, down at the range expansion, and down at the channel low. Now all we're doing right now is we're looking for a way to get short. Here's where we have that range that comes in. Right? Let's keep reading. We get a bearish bias below 117, and after the buyers have tried twice, we now expect the sellers to jump all over this. That's the key. We're going to need to see these sellers really take control here. But this is where the gloves come off. This is where the gloves come off. And this is where I think you're going to see I think you're going to see a bit of a fist fight here on gold tomorrow. Look at the short-term range. Again, everything we're doing right now is bearish. It's not until we get above the 1117 and we shrug off those sellers and get pushing back in. You really got to be patient if you want to be a buyer right now on gold, in my opinion. The better way to do it right now is as this price goes higher, wait for the buyers to fail on a pullback and keep looking for that next selling opportunity. Here's what I'm seeing. I split that short-term trading range right down the middle. 1109.8. I see the buyers now above that 50% area. Remember, you can take these ranges. The markets are fractal. You take bigger ranges, you split them up. You take those smaller ranges, you split them up. I could even split this up into 50s, right? I mean, you can literally split this down as far as you want. And then remember the old two-try rule. Buyers tried once to get back up to 1117. They're unsuccessful. Buyers tried twice to get back up to 1117. They're unsuccessful. That immediately tells me right now these bears are going to jump all over this because the buyers have tried once, swing and a miss, tried twice, swing and a miss. This ain't baseball. This is day trading, and we know the markets love to try twice before giving up. And usually when they give up, stops get run, the hands get thrown in the air, and price immediately reverses with gusto, right? That's the key. When the market fails that second time, it usually goes in the opposite direction very, very strongly, right? So we're expecting sellers here to jump all over it. The one thing, though, that you've got to be worried with right now is the fact that it's too easy. In my opinion, this is too easy. I'm expecting this price to make it much more difficult on us, right? If it was this easy, everybody would be printing money. So here's what I'm expecting on gold. Whenever I see these perfect opportunities setting up, I always think, no, come on, it's not going to be that easy, right? This is the financial markets, right? These markets make 190 IQs wish they could go back to their day job when they try to take the adventure of becoming a day trader, right? That's why it's so good. That's why the profit's so good when we make money. Looking for bull traps. Scenario 1. Okay, scenario 1. We run right back up to the highs. We wait for the buyers to try once, the buyers try twice and fail, and we have a beautiful opportunity to sell. That's what I see as most likely tomorrow. Now, don't forget, if we do happen to get up into this range, be careful to be a buyer because of that phantom trend line. Okay, be careful being a buyer because of that phantom trend line. I'm not going to buy this until I see sellers try once, try twice, and they can't keep it below 1117. I repeat, I need those sellers here to try once, try twice to move it below 17, and when they fail, that's when I'm looking to buy it. I have to err on the side of the bearishness right now. So my gut tells me we go higher. to kind of throw a little bit of a wrench in the mix right now, right? Fake out some of these sellers that are trying to aggressively sell. My gut tells me we aren't done yet. We'll finish the move up here, try to see some bulls jump into this thing, and when it fails, we'll be waiting there to sell it right back down. If it does go lower, okay, if it does go lower, I need to get a lower low below the 1107.4, and then I'm looking for buyer failure. Once, twice, then to sell. So here's the plan for tomorrow. I'm expecting, don't take my word for it, there is no way for me to see the future. I can leverage my experience, but just like you, I'm going to come out tomorrow morning and watch the live market. That's why we have a live trade room. So you can come in and see this in real time and not have to do this on your own. So again, I'm expecting the buyers to try again. Buyers try once, buyers try twice. When they fail, that's going to be a beautiful selling opportunity. We go up in. Seller failure, once, twice, seller failure, buying into that low. And then again, if we do go lower, I just don't expect this to be that easy. Maybe it will be, and maybe I'll be sitting there like a fool or getting in late to the move. Here's the way that I think of it. There is so much profit ready to be made on the way back down. It's okay to be a little bit conservative and wait to see who wins this battle. They're right at 50%. If it goes lower here, first of all, it needs to go below that 1107.4. And then again, I want to see these buyers try and fail, and I'm going to be selling into that failure. As you can see, there's only one scenario here where we look to be a buyer, and that's after we see this price go into the 1117, try to go out twice and fail. That's when I'll buy those lows. There's so much profit to be made going higher here. Once we get above 1117, I don't need to be the first one in on the buy side. But what I do need to do right now is wait patiently. I'm looking for buyer failure right now to sell. I'm looking for seller failure to buy. I know it's a challenging environment, but like I said, this gold is going to be a little bit tricky as we go into the end of this month of September. Why? Because as you heard, everyone's talking about rates right now, and it's going to be a little bit herky-jerky. Talk about a great market right now. How about some crude oil? Crude oil futures. Moving on here now over to our markets that have been very, very good to us this week here. Crude, and then we'll follow up with the SP 500. Crude oil is bullish after sellers completed their rotation back to the lows and the buyers begin their rotation back to the highs. This bullish spike in channel, see, you guys are now specialists on spike in channels, right? If you watch my newsletter, you know exactly how we're going to trade a spike in channel. This bullish spike in channel tells us to look for a deep correction to buy on the way to the 50% up at 46.38 and the possible measured move all the way back up around that 47.23. So once again, rotation, rotation, rotation. We rotate from the highs all the way down to those lows, right? If you remember from last night's newsletter, we gave you guys the exact target down at those lows, the measured move. That was there from last night. Then, just like we expect, we see a rotation off that low. And now we know that we're looking for a rotation all the way back up to the highs. So we are definitely a bull based on channel rotation. At the very least, we do expect to see this rotation back up to the 46.38 by the end of the day tomorrow. Now, with that said, dig in a little bit deeper here, and we have a bullish spike in channel. Spike and channel. Now, that bullish spike in channel, again, like I said earlier, you guys are experts here about spike in channels now that you watch my newsletter every evening. But we know, though, to expect a deeper correction. How deep? Possibly all the way back to the beginning of that channel at 44. So be aware, the beginning of the spike in channel, the beginning of the channel part is how deep we can pull back here before this spike in channel really fails. So bottom line is stay patient. Stay patient. We're expecting a deep correction. And really the best way to trade this spike in channel is we wait for a deep correction, and just when those sellers start beating their chest, right, and saying we're going back to 30s, all of a sudden those sellers fail, and we get a chance to buy right into the stop losses of the sellers. The best way to trade a spike in channel is to wait for the deep correction and then start to keep an eye out for where you would be selling if you thought it was bearish, right? let's say you didn't know what you were doing. Let's say you were a brand new rookie trader. You didn't know how to trade a spiking channel. And you saw that price taking off back towards those lows. Where would you be looking to sell? You'd be selling a retracement, right? You'd be selling some wave patterns down, right? Wave's a great pattern, but not in a bullish market, right? So when you see those sellers get stopped out, that's where you want to be a buyer to get back on that horse and start buying again, right? So great buying opportunities off the low of that range, right? We talked about that last night in the newsletter. Then you'll probably get another buying opportunity, probably middle of the morning tomorrow. Hopefully early in the morning, because tomorrow's a Friday. But stay patient for it and wait for that deep correction. And don't forget, that deep correction on that spiking channel can go all the way back to just about that 44, right? 44.06, right? Give or take a few ticks there. So stay patient for that deep correction if you're a buyer right now. And again, we really don't know how far it will go, right? It may go to 45.12 and then go higher. It may go to 44.61. It may go as deep as 44.06. How will I know? I won't know. And what I'm going to do is I'm going to look for sellers to fail around each of those support levels, right? So look for sellers to fail here, sellers to fail there, sellers to fail there. If you don't know what I'm talking about, guys, that's going to be your big clue that you need to get professional education. If you're going to risk real money, shouldn't you do it the right way? Absolutely. So a bullish clue from range rotation. A bullish clue from the from the bullish spiking channel, excuse me. The next thing on this list is that ABCD pattern. Where's the target going to be on a spiking channel? Start at the spike, all the way up to the highest point of the channel, down to the deepest point of the correction, and then bada bing, bada boom, there's going to be your final target. So keep that in mind. Keep that in mind tomorrow once we see that deep correction, the seller failure, and the opportunity, right, to get that buy going back higher. Also, volume profile. Measure the highest move, right, starting off here from the rotation up all the way down to the rotation down, and look where the volume is. The volume seems to be piled up right around this $45 a barrel, right around that 45 bucks. So what that tells me is that tells me that if we are fortunate enough to get a nice run tomorrow, don't be too greedy, because chances are high it ends up coming right back down by the end of the day tomorrow, right, or early Sunday evening, Monday morning, okay? So the moral of the story is, without any real volume up here, don't get greedy. Don't get greedy on this buying opportunity. Again, you've got targets here at 46.38, and then that measured move target is difficult for me to tell you where it's going to be, just because I don't know how deep that correction is going to be. The bottom line right now, though, is we're definitely looking here for a deep correction, buying opportunities, and then we're going to use that 50% of the range and the measured move, right, for our targets tomorrow. Guys, don't forget, we can't predict the future tomorrow on this, but we do know where the highest probability trades are going to be, and that's what we'll be focusing on tomorrow morning in our live trade room. Come out and join us. Last but not least here on the E-mini S&P. I said it last night. This is not your granddad's E-mini S&P, guys. This is not that sluggish, range-bound market. Oh, well, we happen to be range-bound, but it's a very big range right now. This is one of those markets. Very fun, right? I mean, when was the last time you heard somebody describe the S&P 500 as being a fun market to trade? Right? In historically speaking, most people would put the S&P 500 right up there with a root canal as far as being fun to trade, right? Very profitable, but it's a grind, right? It quarter point increments. It loves moving 1 point, right? So it's 4 ticks at a time. This thing is borderline trading on the same ATR as crude right now. It is a rocket ship and very fun to trade. So definitely enjoy this through the end of the year, because I don't think this is going to slow down anytime soon. Where are we right now? Let's look at the plan here for the S&P. S&P is trading in the middle of the range this evening, sloppy, after sellers rotated price back to the lows of the spiking channel. Remember that from last night's newsletter? We talked about this target all the way down at the beginning of the spiking channel. Oh my goodness, right? Oh my goodness. So now here we are. We filled our target. We get the deep correction. Remember what I said last night, right? This spiking channel, this is a great example of how deep that correction can be on that spiking channel, just like we talked about on crude. Right when you think these sellers are in full control, pulls all the way back, corrects all the way back to the beginning of the spiking channel. Remember, that's how far that pullback can be, right? So when you go to look at crude now you can see what I'm talking about. There's the beginning of that channel. That's the deep correction we're talking about. See what all makes sense now? Okay, so now back to the S&P here. Back to planet Earth here, JJ. We know that we have the spike up, the channel. We got the rotation all the way back down, right? We got that test, that deep correction, and now back up towards these highs, right? Now we're heading back towards these highs, and there will be a very large AB CD up here, but I think that's biting off a little bit too much to chew for a Friday trading session. We'll be lucky if we can get up to that measured move target on the short term, which of course is right here, ABCD. So we're going to be a little bit more reasonable here tomorrow for our targets, but just keep in mind though, there is going to be a really wide target, if I may so indulge. There will be a so you can see it's going to put you all the way up at that range expansion resistance at 2005, actually right back to the big round number. Look at that. So keep an eye on that 2000 level, because that's what the spiking channel is telling us right now is where it wants to go next. Now again, will we get there tomorrow? Like I said, this ain't your granddaddy's S&P, but it's definitely the S&P. So we're going to be realistic, and we'll use some more short-term targets, but definitely looking on the horizon to get back up to that 2000. Okay, so here we go. Now we have the rotation back higher. New short-term channel, right? New short-term channel. That's why we're expecting the late adopters, A, B, C, D. This is really the area right here. This is really the area right there. Between that 1990 and the 1980, you got about 10 handles there of range. And so that's really where you can anticipate this market ending up tomorrow at its highest point, right? It may come right back down after that into the range, but that's going to be your bull target here, right, if you're a buyer. Now, how are we going to play this thing? Well, first of all, looking at the notes here below, the middle of the range is sloppy, so don't be surprised if we get a little bit of a headache here trying to push higher. Okay, buyers are rotating back towards those highs. So the high of this range, that's the ultimate short-term target right now, right? Back to those highs. Talking about short-term targets, bull channel, the buyers, just like we said on the euro. Remember the euro last night? There's your must-reach target right there. There's your must-reach target for tomorrow. We have to get to 65.25 if we're going to have any shot at getting up to the 1975, the 1980, and the 1989 targets overhead. If I had to guess tomorrow, you're looking somewhere around that 1980 half, right? Again, like I said earlier, you've got that little bit of a question mark there. But again, be conservative. It's Friday. You've had a great week with us so far. Take your money and run up there at 1980. If it goes to 1990, right, then, well, then wonderful. So buyers must reach 65 and a quarter. 65 and a quarter is my must do. Okay, if they want a shot at the highs, and the sellers are going to be waiting if they can't get it to go. If they can't get it to go, now we're going to use this little price wedge here, and that price wedge becomes our priority. So here's a scenario. Tomorrow on the S&P, we do expect it to be sloppy because we're right in the middle. Just like we talked about on the Euro last night, right? Where we're in the middle, we had to get that high hit, and then we would know we're going higher here. The buyers are going to keep rotating back towards the highs, so stay to the bull side until we get or fail to get to that 65.25. I can't emphasize that enough right now. That must hit target at 65.25. If we can't get there, the buyer failure will result in a push back down to those lows, right? So again, keep an eye on this. And this is the hard part about trading in the middle of a range, is that it's just going to be sloppy in the middle. So again, scenario one, right? Here's the first scenario. Scenario one, we do achieve the 65.25, and then we look for the correction and the continuation A, B, C, D going higher. Okay, that puts us somewhere in this area up top. Scenario two, we're unable to get to that 65.25. We're unable to get there. We struggle. Now you can expect us to rattle around inside of this range because those buyers will have apparently given up here and head to the weekend. One last thing. Watch the volume on the S&P for tomorrow because we are going to be looking at rollover to the 12.15. As of right now, it looks like the 12.15 is lower volume than 9.15. So as of right now, we're looking good on the 9.15 for tomorrow. But watch the volume. If the volume is balanced, just trade the 9.15. But if it's significantly above on the 12.15, then make your move to the 12.15 and follow the same plan. All right, guys? That does it for me tonight. That does it for me this week. We have a bullish crude. We have a bullish S&P. We have a bullish gold, right? A bearish gold, but we know that they're probably going to make this a little bit difficult on us before we go lower. And then again on the euro, we already made the easy money. Stay patient for another deep pullback. Guys and gals, this has been a fantastic week. Thank you so much for being here. Thank you for sharing this newsletter with a friend. Thanks for leaving your feedback below this video. Give me a thumbs up on the YouTube page. I always appreciate you guys spending your valuable time here with me. Now, head over to School of Trade, grab the free trial, because remember, guys, being successful in day trading, it's not enough to know the terms and definitions. You have to know how to use these tools. Being successful in anything in this life is like opening up a combination lock. You can't make it work by just knowing the numbers. You have to know the combination. And we teach that combination of how to use these tools and how to do this the right way every day to our students. Join the free trial. I take a lot of pride in the fact that you're going to learn more with me in my trial than anywhere else on the interwebs. And then learn more about our beginner, intermediate, and advanced levels of membership, because we have a place for everybody. If you're a brand new trader, my beginner's course is going to help you start your career in the financial markets on a solid foundation. If you're a veteran trader, but you still haven't been able to kind of figure out that combination for success, that's what our advanced course is for. All the tools, all the techniques, the live trade room, and the chat room to make sure you're doing it correctly. And guys, don't forget, we've always got someone standing by 24/7, 365. We are the longest running, most successful trading education site on the web, period. I thank you guys for your time this week. Don't forget, no newsletter on Friday afternoons. Come back and see us tomorrow morning. We open the trade room at 8 a.m. The next time we work together on the newsletter will be next Monday evening at 8 p.m. Eastern Time. Guys, my name is Joseph. Thanks so much for being here. Now enjoy your weekend. Follow the plan for tomorrow. Be well out there. Be nice to each other. And be here next time. I'll see you then. Adios, amigos. Bye-bye for now.